Hey everyone, welcome back to Corporate Decoder, the place where we analyze corporate reports so you don't have to. Today we're diving into Hooker Furnishings Corporation's annual report, and let me tell you, it's not exactly a page turner unless you're really into furniture financials, but fear not, we'll decode it for you and see if their profits are sitting pretty or if their business model needs a little re-upholstering. This report paints a picture of a company facing some serious headwinds. Sales are down, they're restructuring, and a major customer went bankrupt. It's a bit like a furniture store during a housing market crash, but let's see exactly what's going on and if there's a glimmer of hope amidst the mahogany and textiles. Before we get started, it's important to remember that this report contains forward-looking statements. These are basically guesses about the future, and like any guess, they might be wrong. There are many risks and uncertainties. Hooker Furnishings Corporation designs, markets and imports furniture. They sell everything from wooden tables to leather sofas to lighting fixtures. They also make custom leather and upholstered furniture right here in the USA and even outdoor furniture. For financial reporting, Hooker Furnishings is organized into three main groups: Hooker branded, Home Meridian, and domestic upholstery. There's also a fourth group called All Other, which includes smaller businesses. The company mentions a lot of risks that could make things difficult: general economic problems, international trade issues, and the changing tastes of consumers are high on that list. They also talk about their dependence on factories in Vietnam and the potential for cyber attacks. It seems like they're trying to acknowledge all the things that might go wrong, which honestly is most companies' problem. Let's talk about the numbers. The company's stock trades under the ticker symbol AFD on the Nasdaq. They also expect to keep paying quarterly dividends, but that decision is always up to the board of directors. The company's consolidated net sales decreased year over year because the market is generally not buying furnitures as much. The Hooker branded segment's net sales decreased by about 6.5%. They sold about the same volume, however the products were cheaper on average. The Home Meridian segment didn't do any better. Its sales went down by almost 9%. Apparently not selling unprofitable product lines did have a positive effect on Home Meridian's business. Its average selling price increased by almost 25%. Domestic upholstery sales dipped almost 10% as well. However, Sunset West division had increased sales due to East Coast expansion. You can check out their furniture in those links if you want to see the product for yourself. We're also told here that the ERP system rollout has had some issues. What's an ERP system, you might ask? Well, it is an enterprise resource planning software. In simple terms, it's a tool to organize your business efficiently. Apparently, they've only partially implemented it. It sounds like it helps them to keep track of everything from manufacturing to shipping. When it went live at Sunset West and Legacy Hooker divisions, the conversion process significantly impacted shipping activities. The ERP system implementation subjects us to substantial cost and inherent risks associated with migrating from our legacy systems. There might be disruptions. It's not a good sign when a big chunk of your sales relies on just a few customers. Their top 5 customers account for almost a quarter of all sales. If they lose any of them, it could really hurt. In fact, they recorded $3.1 million bad debt expense because a large customer went bankrupt. As of the end of January, they had about $22 million in loans outstanding. They've also secured a revolving credit facility, which is basically a credit line they can use if they need more cash. The non-cash impairment charge is related to certain indefinite-lived trade names in the Home Meridian segment. Also, the terms of their loan agreement limit what they can do with their money, like taking on more debt. They recorded an income tax benefit, not an expense, for the last fiscal year. This is because they had a loss overall, which can lead to tax refunds or credits. If they can't get raw materials at reasonable prices, make goods for their customers, or successfully collect what they are owed, they plan to spend some money on capital expenditures, things like upgrading their systems and facilities. This isn't a big amount, so they are planning to mostly keep their production facility as it is. The company's revenue recognition policy is a crucial accounting practice that dictates when and how they record revenue. This policy adheres to Accounting Standards Codification 606, which is all about making sure revenue is recognized when it truly reflects the value of goods or services transferred to customers. Fair value measurement is like figuring out the true worth of certain assets. The fair value of our trademarks and trade names is determined based on the estimated earnings and cash flow capacity of those assets. Here's the big picture. S-net sales down from $433 million to $397.5 million, which represents a loss of $35.5 million. I call iterating 19 loss. I have a loss of $18 million compared to a profit of $12.4 million 19 loss. Loss of dollars and 19.1 profit to $1.90 loss. The board is keeping an eye on cybersecurity threats. The VP of Enterprise Systems and Applications leads their cybersecurity efforts. This person is in charge of risk assessment, security policies, and employee training. The senior executives, including the CEO and CFO, think about cybersecurity when they make business decisions. Oh, one more thing. The company is exiting its warehouse in Savannah, Georgia, which they estimate will save them about $4 to $5 to $7 million per year. So, what's the verdict? Hooker Furnishings is sailing through rough waters. Sales are down, profits have turned into losses, and they're facing a lot of economic uncertainty. Despite all of these problems, they are maintaining and growing community partnerships in the communities where their employees live and work. They're also focused on making the company a safe and productive place. The company's decision to temporarily pause the ERP project in the Home Meridian segment due to their cost reduction initiatives could also pose more problems in the future. Hooker Furnishings needs to navigate these challenges carefully. Focus on cost cutting, improve Home Meridian, and carefully manage inventory are key. It's a tough time for the furniture business, and Hooker Furnishings has some work to do to weather the storm. Thanks for watching. Don't forget to like, comment, and subscribe for more corporate deep dives. Until next time, keep decoding.